All right, we're super excited to have Sharisse Guyton, Vision and Numbers here at the Marda Management Office. She's going to be covering everything you need to know as a real estate investor. And Sharice, take it away.
Hello, hello. Let me grab my notes from behind my back here. Like Chad said, my name's Sharisse Guyton. I am the co-founder and CEO of Vision Numbers Incorporated. Just a little background about myself. Vision Numbers is a professional bookkeeping and business consulting firm located in Windsor, Ontario. We have been live since 2021. Our main clientele are real estate investors, property managers, trades, and social services. So a little background about me personally. I am a proud graduate of both institutions here in Windsor, St. Clair College and the University of Windsor. I've been doing professional bookkeeping for well over 15 years now, and I have recently obtained my professional designation with the Certified Professional Bookkeepers of Canada. So I have been specializing in bookkeeping for real estate investors for the last 3 years. So what I want to go through is really highlight some of the um, common concerns or some issues that I do see real estate investors face when it comes to uh, with regards to the aspects of their financial management. So a few of the items I want to go through is mixing personal and business finances, which I call muddying the water. Really knowing, understanding your tax obligations as a real estate investor, the importance of financial statements and bookkeeping as an informed strategic decision maker, as well as some documentation you are willing to meet for tax time as that time is soon approaching. And then I'll round it out with just some tips and tricks to help you along the way. So, the first topic, muddy in the water. One of the biggest headaches you can give yourself as a real estate investor is mixing your business and your personal finances. You want to ensure it's very clear to CRA what is going in and out of your account and what is actually deemed business income as opposed to personal. So, what I recommend is you get a business bank account. If for whatever reason you cannot get a business bank account, you need to open a separate personal account, but insurance only used for business. While this is not the best practice, it's still a way of ensuring you are keeping a clear distinction between business and personal transactions. I just want to ensure that you understand the implications of you mixing them. So, if worst case scenario, CRA wants proof of anything that you have recorded to them, whether it's HST, whether it's revenues, you need to be able to provide them that that documentation and that proof. If you are mixing business and personal, even if you have contracted somebody to ensure that your financials are put together for CRA, they have no one to go to but you to determine is every single transaction that hit that credit card or hit that bank account, was it business or personal? Because you have mixed it, you're the only one that can actually answer that question. So, especially if you are in the business of flipping, imagine how many transactions you have for purchasing all of those supplies, how many Home Depot receipts. You want to really ensure you make it as easy and transparent as possible for yourself and your bookkeeper and CRA. The second component of that is the credit card. Most new businesses cannot obtain a credit card in their business name because they don't have any credit history. So, same method. Get a personal credit card if possible, or utilize one of your current credit cards, but ensure from that moment on it is only utilized for business transactions. Again, a clear cutoff point distinction for CRA between what is business and what is personal. Any questions about muddy in the water? So, before I move to the next topic. No? Okay, perfect. So the next one is understanding your CRA obligations. This is one that really seems to bite everyone in the behind. So your three main CRA obligations are going to be sales tax, payroll tax, and corporate tax. So I'm just going to touch on each one briefly. So when it comes to payroll tax, if you are hiring employees, so that means you have someone that you are subtracting payroll source deductions from, which are payroll taxes like employment insurance, CPP, income tax, you need to realize that you have to remit those taxes as well as your matching contributions as the employer to CRA on a monthly basis. So you might wonder, what is your percentage of matching in your obligation? If you are hiring an employee, you can really factor in about 12 to 15% of your employee tax obligations on that. So even though you were paying someone $20 an hour, it really is costing you a lot more than $20 an hour. So it's very, very important that you do understand your obligations if you do go down the road of hiring employees under your business. The second one is sales tax. This one can be a doozy. So, specifically for everyone in house flipping. In January 1st of 2023, they call it the anti-flipping legislation. So prior to this, all flips were treated as capital gains or losses when you sold your property. What this means is that you are only taxed on 50% of that profit from that capital gain. That also meant that you couldn't claim any ITCs, meaning you couldn't claim any HST paid on any of your expenses because you already get taxed at a lower rate on the profit. Since January 1st, 2023, CRA realized that everybody is making way too much profit off of flipping. So now, if you have owned that property for less than 12 months and you sell it, CRA deems that as regular business income. What does that mean? That means you are taxed on 100% of the profit now, as opposed to the 50% profit. This is a huge, huge impasse on your bottom line and on the corporate taxes that you potentially are going to have to pay. My biggest piece of advice, especially if you're in the business of flipping, is to ensure you get tax advice specifically with regards to your corporate tax from an accountant. These legislations are changing literally every single year right now. So they are keeping up to date on that, while your bookkeepers are keeping up to date on all the changes in HST as well as payroll. Your accountants are really focusing on the corporate tax implications. Make sure you get some of the breaks. Uh, so with regards to that, corporate taxes, like I said, if you are at a loss for the year, then you won't have to pay any corporate taxes. If you profit for the year, be prepared to pay. So make sure you understand how much you might have to pay, but also all of the expenses that you can plan to reduce how much you have to pay. Right. So a profit is a good thing until CRA sees it. That's what I always say. So make sure that you really understand the implications when it comes to tax front. The next thing I wanted to touch on, which is my favorite part, is bookkeeping and financials. And the reason I want to touch on this and how important it is real estate investors, think about what you do. You spend a large majority of your time on a project just spending money. All you're doing is putting money up, putting money up. You're not getting any money back. Don't you think you need to keep track of how much is going up? And don't you think it would be important to know when that money is going to run out? If you don't have a bookkeeping software and you're not keeping track of your financials, how do you know when D-Day is? How do you know when you're going to run out of cash if you're not monitoring your cash flow? How do you know how much you've actually invested in total into that project? And how do you know if you've stayed on track? Did you prepare a budget? And if you did, are you following it? And if you are, how are you following it? How are you monitoring? When you have bookkeeping software, all of your information is in one place. That makes it easy for you to gather that information and make those decisions that you need to make. So you need bookkeeping software, keep track of all of your expenses, all that cash outflow in one place. It's the only way that you're going to produce a cash flow report, which actually shows all the inflows and outflows of the cash in your bank account. But it's also going to provide you with project-based profit and loss reports. That way you can see what projects were more profitable. If you're doing a mix of residential and commercial real estate investing, don't you want to know what's actually more profitable? If you're in a position where you can only funnel resources to one or the other, don't you want to know which one you'd rather funnel them to? So yeah, bookkeeping and financials, super, super important for any business owner, but especially for real estate investors. You're doing high volume transactions in the cases of flips, and then your revenues are usually smaller transactions in volume, but very high in dollar amount and value. You need to ensure all that information is in one place. Any questions about financials or bookkeeping before I move on to the next part?
What are some of the softwares that are out there you kind of recommend people should look at?
I recommend that you avoid any any free software. The reason I say avoid getting free software is it is very limiting to what you do. It's really for business owners who have started what they do kind of like as a hobby. You're not really diving deep into profit margins and expenses and huge CRA obligations. You want software that is going to move with you, grow with you, and also be adaptable and easy to use. So make sure it's in the cloud. That way, regardless of where you're at, you'll be able to get the information that you need. If you contract, an accountant, bookkeeper, whoever it may be, they can also accept the software from where they're at. And my personal favorite, after using Wave, Sage, Zero, and QuickBooks Online, is QuickBooks Online. I find it to be the most user friendly in terms of people who have no experience using bookkeeping, but also for real estate investors, that projects modules to really get the nitty gritty of what each project actually costs you, what your profit margins were, to even be able to do billing back from all of your expenses for a projects module. I would say QuickBooks Online is definitely the way to go. So the next one I just wanted to go through. Oh, how could it? It's like I almost blocked it from my mind because I know tax time is coming. Tax time documentation. Canada, I love you so much, but you're the strictest when it comes to documentation on tax time. So it is now the end of November. A lot of you have December 31st fiscal year ends. This is the documentation that is going to be asked of you from either your accountant or your bookkeeper. If your bookkeeper is asking it is because your accountant is going to need it. If you do not have the paperwork, it will delay your T2 filing. Make sure you are aware of the repercussions of delayed income tax filing. So, number one, state have adjustments. You sell any of your properties, you need that documentation from your lawyer. Absolutely have to have it. There are no exceptions to it. Number two, statement of adjustments if you sell any of your properties. You need the paperwork. No exceptions to it. You also need the mortgages if they were held for any of those properties. If you have private investors, yes, you still need documentation. And this is why I can give you a real life example. I have a client right now who had over $300,000 in private investment loans going into his business bank account. No documentation to prove that they're private loans. So CRA will say, how can you prove that that is not renting? Because it is not going into your business bank account. And if we deem it as revenue, that means you should have charged 15% on that and you're going to collect 15%. So that T2 filing is delayed right now and his income tax return has not been filed because the same warning I gave him, the accountant is also saying and will not do the filing without the paperwork. The implications of this, if you think about 13% on $300,000, do any of you have the money right now in your bank account to pay that? And if you do, what is the impact that has on your bottom line right now in your pay of life? That's a huge amount of money. If you get private investments, perfect, fantastic. Document it in some way, shape, or form. Prove that it is not actual business income, but instead a liability. Super, super important. Um, Mortgages, the reason you want mortgages is the interest that you claim on your mortgage. You can claim that to reduce the amount owing on your corporate tax. So most banks do not provide you with monthly mortgage statements. So this is something that you will have to request from the bank. Some banks provide it relatively easy. Some will take a good 30 to 60 days. So the sooner you get that request in to your account manager at the bank, the better. And again, you're looking for your mortgage statement that reflects the interest that had accrued or was paid during that fiscal period. Any questions about any of the documentation that you absolutely must have for income tax time?
See, I'm in the middle of sort of what you just said, and I kind of turned a blind eye towards some of this. I should. Where do you recommend this kind of the launching point to kind of getting on the right path?
So if you are missing any of the paperwork from the purchases or sales, reach out to your lawyer. They're going to have copies of it. So your lawyer, number one, you want to reach out to for that information. Uh, when it comes to your mortgage, your bank, reach out to your account manager. If they are not the specific person that handles, the mortgage division or whatever it may be, they can still point you in the right direction. Again, if you don't have a copy of your insurance policy for whatever reason, some people me myself, I'm with Intact for one of my insurance, and they don't send them in the mail anymore. Even the email, they say log into your app; it's now available for you. Um, find out if that's the case, or if you have an insurance broker, reach out to your broker. How do I get that information? Um, but yeah, reach out to usually the person that helped you obtain or sell whatever it was to begin with. They're usually your starting off point. Or if you have a bookkeeper, you don't gotta spend it. Then I can tell you exactly who to reach out to and where to get from. Because as soon as you sell that property, we're going to be asking you for that paperwork. So again, if you're feeling overwhelmed, make sure you do reach out for that professional advice. Any other questions before I move into some tips, some things that I noticed along the way? Any? Okay. So a couple of these I have already mentioned. So number one, credit card only for business use. Again, your credit card, you just think about your credit card is your ITCs. That's the majority of the HST that you're able to claim that you paid. You want to make it very clear and make it easy for you to be able to claim it without any issue. Uh, seek professional guidance, right? Everybody will automatically assume that using an accountant from the jump. Yes, you absolutely need an accountant, but that is going to be your most expensive research to begin with. Your accountant, just to make it very clear between the difference between accounting and bookkeeping, your accountant, for the most part, wants to focus on your tax return. They want to focus on the high level tax strategy between your business expenses, your personal finances, and doing what is best is really to reduce how much you have to pay at your end, either personally or for your business. Your bookkeeper is your day to day support. So they're the ones ensuring that all of your expenses are allocated properly and they're getting on you. They don't have receipts of all those expenses because they know that they need to provide proof of any HST that they claim. They're always saying that you have a large amount being deposited into your bank account, but they don't have any supported documentation for it. So that's when they're asking you for those statements of adjustments. Uh, so reach out to a bookkeeper first if you're unsure just how to get started with your full financial management setup. Even if you are just thinking about doing it, get some information. Most bookkeeping firms provide free consultations, and majority of them can also refer you to an accountant that specializes in real estate investing. Um, so that brings me to my next tip. When you are reaching out to accountants and bookkeepers, do your homework. Make sure that the accountant and bookkeeper is well versed in real estate investing. Make sure it's not a one person entity, and nothing against people just starting out. You're just a one person entity, but again, your industry involves high dollar amounts. If life happens as it does, you cannot all of a sudden be without any kind of financial support, partner, or guidance. You need a firm that has a contingency plan built in for you. And make sure that they're certified. I was actually surprised with how many accountants and accounting firms I ran into that actually did not have CPAs, which I did not think was, I didn't think that was a thing that happens. But the difference between having that certification and not having it is the standard of excellence that we have to live up to maintain it. We have to continually develop and improve our skill, our craft every single day. We have to ensure that we stay on top of the changes in legislation. And we also ensure because we're always wanting to bring the best level of service to our client. We're also ensuring we're staying up to date on your specific industry because that's how much integrity and pride we have in what we do. So make sure you do your homework when you are reaching out to any bookkeeping firm or accounting firm. Uh, pay yourself. A lot of this money was, especially with these flips, you're doing some of the work yourself. And just remember, you can't really scale if you're the one swinging the hammer. So make sure you are paying yourself for the time that you were actually working on it. One thing that I had noticed when we have these JV agreements where one of the partners is responsible for making sure all the renovations are done, everything like that, and the other one's not the money person. Well, the one that's responsible for making sure all the renovations are done and to coordinate everything, they're not actually billing for their time. And that's project management. So even if you aren't swinging the hammer, if you're coordinating the person that is, that's still your time being spent, and you need to ensure that you are getting paid for your time. And I think that was my last tip or trick. Yeah, do your research, pay yourself, seek professional guidance, and don't muddy the waters. Any questions about anything that I'm mentioning? Good, good. All right. If you have any other questions or think of anything down the road, again, Vision and Numbers, that is the name of my firm. We have a team of 5 right now. We are professional bookkeepers, and we do offer free consultations. I'm more than happy to hop on a Zoom call at any time and answer any questions that you may have. The link to the calendar to book that is on our website at visionandnumbers.com.